Welcome back to the Phuble podcast, the podcast sponsored by the platform Phuble, of course, which is the social networking web platform for investors. Okay, so it is Friday, which means we have a lot of information to go over for this past week. First up, I believe either this morning or late last night, the US GDP was released for Q2 of 2019, came in at 2.10% GDP, which is good considering that the world economy is slowing. For Donald Trump, that wasn't good. He wanted to reach 3%, but actual percentage was 2.10%. Consumer spending was up to 4.3%, which is a very, very healthy number. Because GDP did not hit his goal of 3%, now he's pressuring the Fed, who is coming out with their minutes at the end of July, I believe, on whether or not to raise interest rates or decrease interest rates or keep interest rates the same to cut interest rates even more. So GDP number was okay. Consumer spending was up to 4.3%, like I mentioned. That's a really good number. That means people are spending money. Signals that the economy is healthy in the U.S. for now. I think the Fed needs to look at its own data and not be pressured by the president to cut rates or the market to cut rates, even though they are going to cut rates because of the president and because of the market. You can almost guarantee a rate cut coming from 2.5%. Today, I was listening to a Donald Trump press conference, and he said that the Fed acted too violently in the past by raising interest rates when they should have been cutting. So now he's really pressuring the Fed to lower interest rates. So look for them to lower interest rates. The stock market has basically already priced in them lowering interest rates. Other news, Boris Johnson was elected as the Prime Minister of the UK. He is championing BREXIT. He championed it back in 2016, and he's really pushing for it now. He said that no matter what happens, Britain will leave the EU by the October deadline. I believe it's late October. He sent a proposal to the EU, to Brussels this past week. It was rejected, of course. Donald Trump loves him as Prime Minister. It actually favors the U.S. if Britain leaves the EU because the U.S. then can have more leverage over trade deals with England. So he's a huge fan of Boris Johnson. Earnings, a lot of earnings this week, a lot of Q2 earnings this week. I picked out a few highlights. McDonald's, Facebook, Amazon, Twitter, Google, and Kering, SA. Facebook, they did get slammed with a $5 billion FTC fine this week. That is a lot of money, even though a lot of political commentators and market commentators think that it's not going to change anything with how Facebook handles their data and privacy. That's a huge fine. And I know they bring in about $16.9 billion in revenue every quarter, so $5 billion is not enough. I mean, the thing is with Facebook, they did post strong earnings and revenue growth for Q2. The $5 billion fine isn't going to affect the stock price that much. The issue I have with people really attacking Facebook over privacy issues is this: they make their money off of gathering data and selling it. I mean, that's basically the backbone of their revenue model. That and advertisements, and they produce advertisements, and they're so effective with advertisements based on gathering that data, right? So you take that away, they don't make money. If you restrict them so much where they can't gather people's data, they don't make money. Which brings me to my next point. If you don't want your data collected, don't go on Facebook, 1. 2, if you force them not to collect data, then they'll have to charge a paid model for Facebook. And my issue with that is actually, I feel like that would be worse than the data collection, because Facebook has allowed billions of people to connect with each other. And you're going to take that away. I think from a social impact standpoint, not just from a business, I'm talking purely social, it would be a lot more devastating having force Facebook to actually have a paid revenue model than just collecting data. Like I said before, if you don't like your data collected, don't use Facebook, don't use WhatsApp, don't use Messenger, don't use Instagram, don't use any of their products. But it's like I would rather have a free Facebook and have access to the global community than have a paid Facebook and be restricted throughout the global community. Honestly, I would. That's just my opinion. Now to their earnings. Daily active users increased 8%. That's huge. Wow, to 1.59 billion users. Daily active users 1.59 billion. Monthly active users 2.41 billion. Ad revenue jumped 28% to 16.6 billion. Ad revenue jumped 28% year over year to 16.6 billion. Ad revenue is 98% of total revenue, obviously. Free cash flow is $4.8 billion, up from $2.8 billion in the same quarter a year ago. There was a profit of 1.99 cents per share versus expected profit of 1.88 cents per share. Revenue was 16.9 billion versus 16.5 billion, which was forecasted. Daily active users was just on par with 1.59 billion. Monthly active was on par, 2.41 billion. Average revenue per user was $7.05 versus $6.87, which was forecasted. Facebook's in a really good spot. I know there's the crypto issue going on with them, but they're gaining users still, which is incredible. They know what they're doing for sure, so look for them to go higher. I think they were floating around 199 now. They're going to go to new highs, especially they just innovate, and that's what I love about them. And they have like almost half the world on their platform, so that's ridiculous in itself. They will get past all these things. Their stock is going to go to new highs. I have confidence in Facebook. Okay, next up, Amazon. Amazon lagged on earnings. Earnings per share was 5.22 versus 5.57. Revenue 63.4 billion versus 62.5 billion. AWS, most of their net income comes from AWS, was 8.38 billion versus 8.5 billion. They just had an issue managing costs. I think probably of the free one-day shipping, but I think they're hovering around $2,000 per share. They have a ridiculous, they're $1,943 per share. They have a ridiculous market cap, close to $1 trillion. Their market cap is 956 billion. They can manage their costs, they'll be unstoppable. But it's like they're relying a lot on AWS, like a lot on their cloud services for that net income. And I mean, it's risky. Amazon's risky. I don't think I would want to own them. Maybe once they prove to manage their costs for their products. AWS is like their major workload. That's how they make their money. They don't make money on the actual platform because they offer too many benefits to their customers. Twitter, next up, was huge. Earnings per share 20 cents versus 19 cents per share. Revenue 841 million versus 830 million, which was expected. Their average monetizable daily active user was 139 million. That's not bad. They're doing pretty well. Twitter has finally found out how to monetize the platform, and I mean they're doing well. I would definitely own Twitter. I think they've expanded into live sporting events. Not only that, for the younger population, the platform's a lot more popular than the older population, which pretty much uses Facebook. Twitter's mostly the younger population. They have a good PE ratio. Market cap is 30 billion. They're most likely, I bet in the next 10 years, probably the next 5 years, they're going to double in market cap size. They're at like $41 per share now. I would love to own Twitter. Twitter is just a powerhouse. McDonald's, my favorite stock of this week. McDonald's is doing very well. Earnings per share was 2.05 cents versus $2.05 that was expected. The revenue was expected just around 5.34 billion, but the same store sales growth was 6.5% versus 5.1%. Net income was 1.52 billion or $1.97 per share, which is up from 1.5 billion or $1.90 per share a year earlier. the same store sales growth increased. They have less foot traffic, but they increase prices. I was just at McDonald's today. It's an experience going in there. They've completely renovated their entire restaurant look. The inside is amazing. Like, you want to sit and eat in McDonald's. And it's fantastic. I mean, you're talking about a company that has almost 40,000 stores worldwide. They can increase prices with the way that they renovated the inside of their stores and use kiosks and stuff. I love McDonald's. Their stock is trading at 215.58. They're definitely gonna probably move up to $200 billion market cap soon. They're at 164 billion right now. PE's in a good spot, 28. They're doing well. They'll probably break 230 very soon, the 230 price for the stock, and then they'll just climb up. They're gonna be like a Chipotle, which also is doing incredible. By the way, Chipotle is just blowing the metrics out of the water. I mean, they're doing fantastic. If they can keep increasing prices and providing like that experience to a global market, they're going to be unstoppable. Next one, Alphabet, of course, which is Google, beat on earnings per share, $14.21 per share versus $11.30, which was expected. Revenue was on par, $38.94 billion, almost $39 billion for revenue for Q2. Traffic acquisition cost was lower than expected at $7.24 billion. Google's doing well. In the past, they've blamed their revenue decline on YouTube, but YouTube is going to explode very soon. Google is a good stock to own. Google is a very good stock to own. What was holding them back in the past was their ability to monetize YouTube, honestly. And now that YouTube is in the beginning stages, actually, of just exponential growth. So Google is going to explode definitely past like 1,500, 1,600 per share within the next 2 years. I assume 2-3 years. They're a good stock to own. They're at $1,245 right now. Market cap is $863 billion. So they're definitely going to become a $1 trillion stock very soon. I have all the confidence in Google, which is Alphabet, of course. Next, Korean SA, which owns Gucci, and it accounts for more than half the revenues of Korean. Gucci accounts for more than half the revenues of Korean. Sales at Gucci slowed to 16.3% for the first half, I believe, of 2019. That's compared with 37% sales growth in 2018. That could signal a slowing of the world economic market because people aren't buying luxury goods. Thought I'd just throw that one in there. That was an interesting stock. Current SA trades at 491 euros on the Paris Stock Exchange. I'm not too thrilled about owning luxury goods, especially when I think there's a market decline coming. Next up, a few news headlines for this week. We'll just run through these very fast. So there's a gold heist in Sao Paulo, Brazil. Thieves stole about 1,500 pounds. Is that right? That can't be right. 1,500 pounds? Okay, sorry, not 1,500. 1,600 pounds of gold. Robbers stole 1,600 pounds of gold at an airport in Sao Paulo, Brazil, which is estimated to be around $30 million. Oh my gosh! And they stole it in 8 minutes. That's incredible. Wow. Speaking of gold, price of gold is on the rise. I think it's at $1,430. The price of gold is at $1,418 per ounce. It is going to break out soon, probably up toward $1,500, $1,600. Gold is a great investment right now, I think. I've really believed in it over the past year, and I think it's just going to keep increasing, especially when there's $30 million of it missing in the market. Oh my gosh, that's incredible. Okay, other news. T-Mobile Sprint deal was approved by the U.S. Justice Department. T-Mobile acquired Sprint for $26.5 billion, I think last year or 2 years ago. It was just approved by the Justice Department, had to go through antitrust rules and be cleared. The U.S. didn't want there only to be 3 telecom giants, which is of course Verizon, AT&T, and now T-Mobile. Sprint was the 4th. T-Mobile acquired Sprint, so now there's 3. But they're kind of transforming Dish Networks into a telecom company. There's a lot of assets that were sold to Dish by T-Mobile. T-Mobile promised to deploy a 5G network that covers 97% of the U.S. population within 3 years, 99% of the U.S. population within 6 years. That's insane. That's actually insane. T-Mobile is a fantastic company. Love the stock. Love that they got Sprint. Last piece of news, the France digital tax. Emmanuel Macron signaled that he might tax U.S. social media companies in France. Donald Trump came back today and said that he would tax French wines. So I'm going to play the clip of Donald Trump saying that he would tax French wines because I think it's like one of the funniest things I've ever watched. Him talking about how he drinks wine and doesn't really drink wine, but still drinks wine and thinks it's good, but he's going to tax the French wine anyway. And that's how we're going to leave this episode. Thank you so much for watching Phuble. Stay tuned, subscribe, and I'll see you guys next Friday.
Are you going to slap tariffs on French wine?
I might. So France put on a tax on our companies, you know that, and wrong thing to do. They should not have done it. So I may do that. I've always liked American wines better than French wines, even though I don't drink wine. I just like the way they look, okay? But the American wines are great. And they didn't do the right thing. When they start taxing our companies, we tax our companies. They don't tax our companies. So France did that. I told him, I said, don't do it, because if you do it, I'm going to tax your wine, meaning tariff or tax, call it whatever you want. So, yeah, we're working on that right now.